my opinion only. It's educational purpose only. Someone from this group reached out to me right before I come in here and say, "Hey, you and me in OC Club, OTC meetups. I see you that we are in another meetups. Are you a financial advisor?" Yes, I am a financial advisor. I just have all the compliance, all the regulatory just for my educational purpose. By profession, I don't have time for doing financial advice for other people just because I'm so busy with my all the other obligations. That's why. But I maintain all the compliance certification. So let's talk about this. And I'm sure some of you heard that sell in May and go away. Now on Monday, we are going to be getting in the mode of first day of May and April closed and so on. And we have seen so many means 25% or close to the 50% S&P earnings came up. So far, so good. We'll find out more. But what does that mean? Sell in May and go away is just saying, but doesn't mean that it might happen. But we see traditionally that May, June, July, August, people go on vacation. Market is just not as strong as other times. So now let's look at last 40 years, what happened between May till August. Here on this chart, what you're looking at, the S&P return around that time, last 40 years since 1982 till 2022. It's all the return from May, June, July, August, those months. But if you're looking at it, like even last year around this time, it was negative. But before you see that right before pandemic, around that time, pandemic time, the market we knew it going down, but right away it picked up so fast. Just during pandemic time, we feel so many of us felt like, man, it's going to go to the moon. So it's giving you signal, but what does that mean? Stock return around this time. So you can see that the overall return, those who is doing just like conservative investment return is around 3.2% if you're looking at doing the average for last 40 years around this time. Now, this is last week, I think some of you saw that the GDP number came up, and this quarter GDP number came up minus 1.1%, which dropped the number one dropped this quarter. So which the expected was around, I think, 2.6 around that time. So what that means, we know that the growth is slowing down. So as growth is slowing down, some more hiccup or what might happen, not sure. But those who's thinking, hey, first 6 months, we are already on month 5 and 6. We knew that our first 6 months is going to be rocky, and second half of the year is hopefully going to have a more stable. We'll find out soon. But to back up this earnings, this first quarter earnings, you are looking at last quarter one 2022 22, each quarter you see the earnings EPS. Here is EPS beat and revenue beats. So if you are looking at this first quarter of this 2023, pretty much so far according to S&P, most of the company did not bad. EPS and revenue they're not doing bad. But as far as their profit margin, look at earnings. The earnings are negative. S&P, if you're looking at first quarter, minus 1 point, and it's the growth point minus 1.7 year over year, comparing the versus 6.6 estimated last year and so on, right? So it's getting concerned for multiple things. Why do you think it's happening? I just want to hear you guys. What do you think so far? Some of you are understanding. I know we have economists, financial experts in the room. So here, look at this. If you have an opinion, please, by all means, unmute yourself, share. What you're looking at, the household consumption, personal consumption versus US GDP number. If you look at that US GDP versus personal growth, GDP last quarter slowdown. Before that, where it was 2%, now is slowly going, is went down versus that consumption spending money. But we know that what happened, that inflation, or at some point when inflation too high, the spending, people are stuck in the house. On this chart, what we are seeing, that this chart, it tells you that at that time, things were so expensive, but people had tons of savings, and they are okay to start spending it. But as time went by, and then we know that there are a lot of tightening happen within the Fed, rate, banking side, and also job side. Others organization also did took the proper measure to have that enough fund in order to continue in the business. Look at consumer spending. It slowly it came down, but last quarter we know that as the rate went higher and inflation kind of came down, people are back to spending money is not bad, right? So you're seeing more and more people are doing those, purchasing that. So with that, this whole slowing GDP got it's back to the discussion they're having. Are we going to head to the recession in order to reset all of this? What do you guys think?
It means that people are ignoring what's going on in the US economy, and they are spending because the prices of goods coming from China are so cheap. I am a testament to that.
Mm-hmm.
I will buy stuff
Mm-hmm.
because it's competitively inexpensive,
Mm-hmm.
and it's because it's coming from China. So China is eventually going to win.
Mm-hmm. Okay.
In the short term, anyway. So the story about inflation, I think, is a bit stretched. I don't think we are going to have inflation per se.
Okay. Right. The consumer spending, what you're looking at is healthy. So at least it's one good sign in the market, and hence, that on the equity side, on the market side, are we going to have sell off again? Are we going to go down? And so on the equities, it doesn't, for next short term, it doesn't look that way, even if you look at short term, long term. Now, some of the things that what you have seen, that is GDP slowing down, this curve gives you better direction, where you can see the jobless initial job. At some point, we had a lot of job open in right after pandemic. Nobody wanted to work. People are stuck at home. They're afraid to go outside. Company was having hard time to fill those openings. You had too many people sitting there. They are refused to go out, and afraid because of the health, and also because of the scarcity, with life over death and so on, right? But if you look at the job opening, the initial jobless claim, so a lot of people went to job claim was higher unemployment, where around March last year, around this time, you can say exactly around this time, high the rate of job opening stuff. Now, what are we seeing? If you look at this blue curve, the job opening number, we know that last year, around this time, ChatGPT, OpenAI kind of started internally that making this AI, just spending more time on doing the research, figuring it out how can automate a lot of tasks and stuff. Some companies took advantage of all this. But look at that November, around this time, it from here, August 22, November, slowly, ChatGPT officially came out, I guess, around November last year. But since then, you see that how it is reflected. Yeah, it's very quickly job number went down, up, but again, just big sharp down from December, that unemployment number. But on the
Eh,
versal, I'm sorry.
Go ahead. Sorry, Mushi. After you're finished, I have a
So
question.
the initial jobless number, if you see that the unemployment number was down for a long time, but now slowly is picking up. But in the last few months, even February, if you look at February, is staying here. But based on what we are seeing, this curve either go down or up. This is still will yet to find out next few more months. Okay. So this is giving that economists some a signal that hey, in this period earnings is down point one point negative 1.7 so far revenue, but revenues up, but the profit margin is not as expected. So they have to companies have to doing more tightening their spending and growth areas. If that happens, you will see more of this number is going job opening is going down more because people are now afraid what might happen next. And with the new shakeup happening with this AI and automation happening, I see that even within my own organization, and I'm involved, I have friends and others, they are saying, they see some of those rock stars who is able to do multiple work jobs today with the help of some of these tools like this. And the others who just think I have a job, they are thinking differently to let them go. Okay. So go ahead. You have something else to say.
No, Mushi, I was thinking, where is this taking to from a, you're supporting the recession, the slowing down of economy overall in general, right? With this, this
Yeah.
data is telling us
Yeah, data is telling
it's going to
us.
be a,
Yes, you're right. Data is telling us although earlier they didn't think that we are heading to recession, they may have to call it at some point. We don't still yet to find out next few. We still have two more months to decide next quarter to this. And are they going to go doing a soft landing and saying, okay, let's do a soft recession and reset all of this, or just move on? But as far as the labor market, yeah, labor market looks like it's comparing unemployment. If you look at what happened labor market before unemployment versus now, we are still really in good shape.
yeah.
I think
So this is a good data point. Now, I'm just curious. The source of this is Bloomberg, right?
Yes, Bloomberg,
Is
correct.
Bloomberg really highlighting the Chat GPT as the catalyst, or one key contributing factor, or is that?
This data came from Bloomberg and U.S. Labor Department, combination of both.
I know that
Right.
the Chat
But
GPT aspect specifically came from Bloomberg, or is
like
that
Bloomberg themselves announced also adapting ChatGPT on is I'm not sure if you are following that, what they're doing on the Bloomberg terminal. ChatGPT, they have their own internal version coming up very soon. You're going to see that. Okay. Yep. They're
okay? All right, thanks.
adapting that AI.
so. Let's think about this holistically, right? Without looking at the statistics. We know that there's been a mass, all the big fangs have
Layoff.
recession.
Mhm.
So, what do you think that's going to do to the initial job claims? They're going to go up. So,
Yep.
from this
Right.
position where you have 250,
Yes.
I expect that to go up to 300 at least.
That's
next
that's why
right?
they are, yeah, you're right, Yasmin. That's why they are saying that we
Yeah.
may see that sign of recession if it's that GDP is not improving, and some other, the unemployment is healthy now for a while. We'll see how long it is stay, right?
Yeah. And then the blue line, which is job openings, I will attest to it because I'm in that space.
Mhm.
It is down, but there's a small spike right now because the market is leveling off,
Mhm.
right? The market is beginning to, I get it. I almost feel like it's saying, I get it. Oh, we are here and yet we are here.
Mhm.
But consumption is high because our behavior pattern is
Mhm.
such.
Right.
People get satisfaction from being with consumerism, right? So we have to always think about the behavior patterns. Human beings don't change behavior overnight.
Mhm.
The market, the Fed can say whatever they want, but people will not stop buying, provided they get goods at a competitive price, which we can still see in Amazon that it's marked down.
Mhm.
But I'm seeing a whole lot of stuff, and I'm going, okay, with us having so-called full employment, which I think is a lie because there's a whole lot of unemployed people who are not
Yes.
reported,
Right. I do think
right?
I agree with you, Yasmin. I think some of this
Yeah,
number is still so many people are not reporting, but we do not know how much,
yeah.
how real time this data, right?
So I'm trying to tell you, let's take a holistic view, right?
Mhm.
So we need to use our sense and not just rely on statistics.
Mhm.
Is we know that people are employed. They may not be employed at the rate they should be, but they're employed, which is a
Yes.
good thing. So they
Mhm.
have money in their hands.
Mhm.
Until unemployment dramatically drops,
Good chunk of growth with Nasdaq and S&P was right there. So year over year, Nasdaq is still is on a good pace. That tech is doing well. Let's see how long it is stay. But these earnings are going to come in this coming week. As this coming week, more and more earnings come up. That I know that some of you already heard most of the details from Vinny. I am not advising anybody just do the short term buy based on the earnings. But if you like any of these stocks coming, the stocks or company based on what's earning coming up, then grab with it. Some of those companies very strong with the fundamental, and some of those technical also very strong. So based on your own research and time, just trade accordingly. But on Wednesday, I think that we know that what we heard earlier also from Vinny and others, this Fed big day coming up on Wednesday. What Fed going to do and what's coming for what's their plan for next few quarters? Based on that market, we are going to see which direction it goes. So one thing we can see that the what you are looking at this technical analysis on that SPX chart. If you look at SPX chart, let's say, those who is looking at, 200 days moving average, 50 and 100, that moving average, you are seeing that here 50 days moving average. So far, SPX is staying for a while, which is good sign. Now, by looking at this, if you see that in order for us to go upside, you see how long it's been sitting and try to go over 4,200, it came down. It's again in this channel state. It stayed it's so far it is staying above this 4,000 SPX. But on a Wednesday, and we'll find out, what happened this week. This week is going to tell us, are we getting to in the upside mode, or is going to come back.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.